Hello, I'm Dr. Greg Winteregg, CEO of the Private Dentist Alliance. I want to talk to all of you students out there today who are wondering what your future is going to be like as a career in dentistry. As an assistant, as a hygienist, as a dentist, where is this profession going with the rapid increase of the DSO movement? I'm here to tell you that PDA is going to help you, and I want you to become a member today. It is free. Now, why should you become a member? You're going to get weekly video updates from me, and you're going to get regular updates of our newsletters from the Alliance on exactly what is happening and how we are going to help preserve and protect the private practice of dentistry. Now, to me, the most important advantage is you are going to get access to our job board. What is that? Our private practicing members all have access to our PDA job board, which means if they have an opening in their private practice of assistant, hygienist, doctor, front office staff, they're going to be able to post it. And you're going to be able to check up regularly. And as our membership grows, we're going to be covering larger and larger territories across the United States. If you are looking for a job in any position in the office of a private practice, you need to become a student member today. It is free. Go to www.privatedental.org and become a student member today. You're going to love your benefits. Do it now.
What is up, guys? It's your boy Matt Havis back at it with Dental Student Vibes Podcast. Today we have an awesome interview for you. Dr. David Carter, the Ortho Prophet, sits down with us for part 2 of our discussion with him. And today, it's nothing really clinically. All he does is he sits down and talks to us about how to avoid your taxes. Not evade. Evading taxes is illegal. We don't like that. We don't condone that. We avoid taxes by looking for loopholes and then saving as much money as we can to keep it in our pockets and out of the IRS's pocket. You work for the money. You deserve it. Let's hold on to as much as we can. So we'd love for you guys to tune in, listen to it. And if you have a chance, check it out on YouTube. He gives an awesome flow chart of how everything should be broken down, how to do things, and it's very good if you're a visual learner. So by all means, check it out. He goes into everything by opening your own personal management corporation, so that way you're able to write more stuff off and you won't get audited by the IRS. There's a lot of good, helpful tips that apply, and this will save you literally millions of dollars over the course of your lifetime. Check it out. See what you guys can pick up from it. We loved having him on. We definitely want Dr. Carter on again, because he has the top of the line tips. He has these awesome pearls and things that you can only acquire after a long and very successful career. So as always, follow us on Instagram at dental.student.vibes. Let us know what you think of this interview. Let us know what we could do better. Let us know what we can do to make this the best podcast we can for you. Give us a like, comment, or review. We always care about those. We always read them. So as always, we hope you guys stay safe, and let's just vibe on.
Welcome back to another episode of the Dental Student Vibes Podcast. We have the whole squad here with us. Seth, George, Anthony, Cole, and the Ortho Prophet, Dr. David Carter. Dr. Carter, how are you today?
We're good, guys. Thanks for having me again. Sorry we had a little technical difficulty there. So glad to be back on you guys' program again. Thanks for the invite again. I heard that Bill Dorfman got elbowed out. Just took him out of the scene tonight.
Right.
But make sure you tune in next week to see Dr. Bill, right?
That's right. Great.
So, well, thanks for having me back again. I've got lots of stuff I'd like to share with you guys from what I'm calling the learning loft. It's I here towards the end of my career, I've been practicing dentistry since 1988, and I'm an orthodontist. You guys already know that, but a lot of stuff that I learned later in my career, I wish somebody would have helped me from the very beginning. And unfortunately, I didn't have anybody to mentor me. My father it was his second career, so he was kind of on the way. He was walking out the door basically when I bought the practice from him. And he stayed for about 5 years and he was gone. And so I learned a lot of stuff through the School of Hard Knocks. And one of the things that I learned that I wanted to share about tonight is about how to be profitable. When we use to play on term, on words, the orthodontic profit. But how can you be profitable from doing orthodontics? There's lots of ways you can be profitable off of orthodontics. You can get profitable off of doing restorative implants, whatever. But before you start making a lot of money in dentistry, I want to set you guys up for success by just telling you one simple thing that I learned. And I'm actually going to take over the screen and do a drawing. I had it prepared, somehow I lost it, but I'll just create it while I talk about it on screen. But one of the things that I wish I'd have known back when I first started my career was how to hang on to more money. Okay. You get into this vicious cycle of the more money you make, the more money you're taxed on. Okay. So before you ever head down the road towards being financially successful, make sure you're a good steward of your money, okay? And don't rely on a CPA to do it for you. You better learn how to handle your money yourself, okay? So I just like to call it the good steward. And I'm gonna take over the screen here, and I'm gonna let's
see, it's great. And David, while you're pulling that up, it's so important for our listeners to, know this, because they're dental students themselves. And they're, like you said, they're going to need to be able to do this on their own, independent of their CPA. We had a great lecture last night from Dr. Greg Winteregg, and he went over, how to actually, the dental student, going to be the former, the future practitioner, here is your overhead costs. Here's your, production, and how to calculate all of that stuff and how to actually do it. We went through a chart. And he gave us some, sample ideas of, how to increase it, decrease it by 10%. So like you said, it's so important to know how to do all that and know exactly where your money's going and how you're making it.
Hey, Seth, you have to let me share the screen. It's not letting me share the screen.
Let me do that for you. So you also mentioned holding on to your money, right? Yep. The easiest dollar earned is a dollar saved.
Yeah. So, people get a little uneasy when the word tax avoidance comes up. They mistakenly think I said tax evasion. Tax evasion is not paying taxes at all. Like just say, I'm not going to pay. Tax avoidance means you understand how taxes work, how corporations work, and how you can create corporations to run some of your money through so that things become business expenses, and you pay with them with pre-tax money than post-tax money. That's it. It's that simple. You want to pay for as many things as you can with pre-tax money versus post-tax money. Because if you get taxed by the tax man a whole lot, there's not a whole lot at the end of the month to pay all your bills with. Still working on stuff?
Yeah, we've got it. We just made you the host so that you can share your screen right away.
All right.
All right, you should be good to go there.
Yep. All right.
Excellent.
So you guys see my screen now?
Yep.
All right. So I had this all written, and somehow lost it. But it'd probably be better me doing it live anyway. So I want to teach everybody watching this video how to be a good steward. And by the way, if you want to get this program, this is Draw.io. It's a really neat program because you can put a lot of your thoughts on paper and create logic charts for anything you want to, like any business idea. If you want to start a new business, you put it on paper first and kind of change diagrams. But I want to call this talk the good steward. And I just want to tell you that whenever you get started in practice, you're going to start your practice LLC. All right. So you got to practice. You've got this great dental practice. You open your doors up and you decide that, you know what? I'm making money, and I'm making so much money that I'd like to get to the point where I got $500,000 a year coming out of my practice. Okay. We talk about practice. How's practice going to make my team better? Sorry, little Allen Iverson, if you guys ever remember that guy.
Oh yeah.
Practice got to do with this. So let's say you'd like to tell everybody you made $500,000. Okay, a year practicing dentistry. Okay, it typically what most people do, most dentists do, is they decide that they're going to pay themselves as a W-2 employee. That's the biggest mistake you can make, all right? Because what happens is when you make yourself a W-2 employee and you're paying yourself $500,000 a year, does anybody want to venture a guess what tax bracket that puts you into?
35%. No, is it 42%?
Let's just round it. Let's just round it off and say it's 40%. Okay. So because you told Uncle Sam that you made $500,000 as a dentist, Uncle Sam says, "Thank you very much. I would like $200,000 of that." Is my math correct there, guys?
Yeah, you're good. It is.
All right.
He's good at math.
So now you just told Uncle Sam, here's your $200,000, Uncle Sam. Go waste it however you want. And now I'm going to live off of $300,000. All right. Now I remember the day when I thought if I ever made $200,000, I would live like a king. And then I started paying $200,000 a year in taxes, and I was like, I got to stop this madness. This is not working out too good. You know, there's got to be a better way to do this. You know, and unfortunately, as a dentist, you have to, if it's your practice LLC, if the IRS was to audit you, and let me first say, I'm not a tax attorney. I'm not an accountant. So this is my opinion. I'm gonna put it out there in case this video is viewed by anybody else. This is just a hypothetical situation. But I want everybody to understand the premise of this is to avoid this number right here. Because in this case, in this scenario, you just paid $200,000 to Uncle Sam. And ask me what Uncle Sam did to deserve that $200,000. Anybody want to?
He wrote down all your financials on a piece of paper.
Yeah.
All right. So what most people would do then is they would go, well, I'll just make more money next year. I'll make $1 million. Great. Keep paying yourself as a W-2 employee of your own practice, and you're going to pay $400,000 to Uncle Sam. It doesn't work. The math will never work out unless you do it exactly like I do it. This is years from now. Anybody that's viewing this right now will go, you know what? I saw that crazy guy from Georgia, that bald-headed guy with the white beard, the Ortho Prophet. He said for me to do this, and it saved me millions of dollars in my career because I was able to do it correctly. If you were to get audited, if your practice, I spelled you practice, but it's your practice. If your practice ever got audited, the auditor is going to come in and say, I want you to justify all these expenses. You took some trips and you bought these things. Please tell me how those things all relate to your dental practice. And you're going to have to justify it. And the auditor is going to go, nope. You're going to pay taxes on that. Okay. What you have to do is one simple little thing. And I wish somebody would have told me about it a long time ago. Like I said, you have to set up your own personal management corporation, okay, which basically manages your practice. In other words, your practice could say, I want to have somebody come and manage my practice for me. Bad idea. That's the lazy man's option, okay? You should never let somebody else manage your practice. You need to learn how to do it yourself, okay? But then you do need to have a doctor. Okay, you need to have a doctor. And if it's you, if you're the doctor, gosh, I can't even type correctly, sorry, bear with me. If you're the doctor of your practice, you have to stop and say, look, if I'm running my practice, your practice LLC, how much could I pay another dentist to come in and run my practice? All right. So if you were to say that you could find a doctor out there to be the dentist in your practice. Let's just say you could find somebody for $100,000 a year. There's dentists out there that work for $100,000 a year. Like me, retired guys. Yeah, I come in and do it. I ain't got nothing else to do. I'm kind of bored anyway, right? So if you could find somebody, another dentist to run your practice, and pay them $100,000, then why don't you just say that you'll be that doctor? Your corporation will make that decision that the practice has $500,000. Instead of paying you as a W-2 employee of $500,000, you're going to pay Dr. Let me change this a little bit.
This is great software, by the way, because this really like makes everything more understandable, comprehensible.
All right. All right, so what I'll do here, let me change this arrow. Yeah, this is a neat program. Okay. So instead, what you're going to do is you're going to call yourself Dr. Good Steward. You're going to be a good steward. And you're going to say, well, you know what? I'll be that employee. Okay. And so your practice LLC is going to pay you as a W-2 employee, not $500,000 a year. You're going to pay yourself $100,000 a year. Okay. Make sense so far?
Right.
If you could, I'm not telling you to go find another dentist. You're going to be that dentist you're going to find, and your practice is going to pay you a W-2 check. It's just going to write 2 checks each month, or do it electronically. One check's going to be to you as Dr. Good Steward. It's going to be for you're going to be a W-2 employee. You're going to pay yourself $100,000 a year in this example, which puts you into the probably about the 20% tax bracket. All right. Which means you're going to pay
20,000.
20K.
Here's a disclaimer: don't live in California or New York.
That's right. You're going to pay. You are going to be taxed $20,000 off of your W-2. Okay. Y'all, you guys follow that so far? Mm-hmm. What you're going to do also then is you're going to just either write a check. You're going to keep track of this. You're going to do your own accounting. You're going to pay your personal management corporation to run your practice. All right. And you're going to pay your practice $400K a year. Your practice is going to pay your management corporate. I said that wrong. Your practice has $500,000. It's going to write one check over here to Dr. Good Steward, who's going to be taxed as a W-2 employee. That's you, because you own the practice. And you're going to pay $20,000 in taxes. Okay. Here, under the personal management company, now you have another corporation that you've created that's not your dental practice that can legitimately do almost everything as a business expense. Now you're running your life as a business. Do you guys understand what that means?
Right. So let me ask you a question here, David. Do you make it an LLC or do you make it an S corp?
LLC.
LLC. Okay, gotcha.
And again, I'm not a tax attorney, not a CPA, but that's how I did it. Let's just put it that way. Okay. So in this example, again, now the personal management corporation has been paid $400,000, and now you can run business expenses through that. All right. You can legitimately say now your real estate, your mortgage on your house, you're investing in real estate. Your management company here owns your house. And so now you're going to pay, your house is going to become your place of business. And now your mortgage becomes a pre-taxed item. You follow that?
Gotcha. Yeah.
You're going to pay rent, which would be, somewhere around your mortgage, I guess, number, all right, to the bank. And it becomes a business expense then, all right? But now you are going to have to understand that this new corporation, this new management corporation, does have to have a manager, okay? And that manager is going to have to be the person running your management corporation, okay? It could be your wife, it could be you. It doesn't really matter, if it depends how you're filing. If you're filing jointly or individually, again, I'm not giving you tax advice. I'm just saying that's how you need to think about those things. But now this manager, you got to pay him something. And so let's just say that you're going to pay, a typical manager of a management company makes about 50 grand a year. Okay. And so that's the taxable income. And so now you're going to pay, which drops you down into probably, gosh, I don't even know what tax bracket, probably 15% tax bracket. Let's just say 10. I don't even know, maybe a 10% tax bracket. All right. And at a 10% tax bracket, it means you're only going to pay 10% of the 5,000 in taxes. And so let me do one more bubble down here. So, well, I don't even need to do that. Never mind.
So if you're paying yourself, so if you're also the manager,
Yep.
would you add those together and would you be at the $150,000 tax bracket?
Hang on a second. I'll show you. Hang on.
Yeah.
So now you're gonna pay your manager, which could be you or your wife, okay, to manage your management corporation, okay, run it. That's the employee that you have to have, because the IRS says you have to have an employee to run the company, okay. It could be one, and now you've reduced your taxes even more, and so this is giving you, if you're paying a manager $50,000, okay, out of the 400, doesn't that leave you $350,000? Did I do my math correctly there?
Right.
All right. So so now you better, at the end of the year, you meet with your CPA, and he's going to say, he or she is going to say, how much is left? Because your only taxes at the end of the year will be on corporate taxes, which is the 20% tax bracket roughly. And so if you could spend all that $350 down to zero, I'm not saying on frivolous stuff, but if you bought real estate or paid for your, travel, whatever, cars and things like that, those are all business expenses to your management company, not to your dental practice. That's how you get, like, you wanted a second car out of your practice. The IRS is going to say, well, you can drive it back and forth to work, and that's about it, right? It's for dental purposes. If you pay for it out of your management company, it's a much better way to do it, all right? Because they go, IRS says, who's that car belong to? It belongs to my personal management corporation. Okay, what are you doing there? Everything. My whole life is run out of I just happen to manage my own practice. Does that make sense, everybody?
Yeah.
Right.
All right. But at the end of the year, if you didn't spend it, you have two options down at the end of the year that I would highly recommend. One is give to charity. Do good by doing good, right?
Right.
The other one is you could have a tax shelter, legal tax shelter. Some of the better ones are called donor advised funds. And those entities are very interesting. I'll let you read that out. That would be a whole nother discussion on tax shelters. But if you put money invested in a donor advised fund, let me move these over a little bit.
All right, guys, that'll do it for our interview with Dr. David Carter, part 2. We hope you guys enjoyed it. And again, I want to apologize. We had some technical difficulties in the beginning trying to get the hosting situation set up on Zoom. There were some problems, but it all worked out. We really enjoyed having him on. We got to see that awesome flow chart he made. Make sure you guys check it out on YouTube. If you haven't gotten a chance, you just listen to it off of your normal podcast platform. Check it out. There's a great wealth of information for you guys on there. It'll definitely help to visualize it, and it'll just get you guys ready for when you're going to be private practice owners to save millions of dollars within your career. Really, really high yield information. I picked up a lot. I know the other guys in the Vibe Tribe did as well, and we're going to use this stuff for the rest of our lives. So, as always, we hope you guys enjoyed it. Let's stay safe, let's vibe on, and let's just become the top 1% dentists that we can.